Welcome back to Investing Talk Podcast. Today, we're going to be looking at Itaú Unibanco Holding SA, ticker symbol ITUB. And it's a major player in the Brazilian banking scene. Now, ITUB is kind of on our radar today because there's a lot of buzz around the stock. You've got analyst upgrades, whispers of potential mergers, and of course, those upcoming earnings reports. It's a little bit of a roller coaster, so we're here to break it all down for you. Let's start with that HSBC upgrade from hold to buy. It was issued January 13th, and they're projecting a potential upside of almost 28%, aiming for a target price of $6.49 per share. That's a pretty bold statement, especially considering the current economic climate. So what's behind HSBC's optimism?
Well, it is interesting, isn't it? HSBC is usually pretty conservative, especially when it comes to emerging markets. But they seem to be really bullish on ITUB. And their analysis points to a couple of key factors. First, they're impressed with Itau's digital transformation efforts. The bank has been investing heavily in technology, and it's starting to pay off, at least in terms of customer acquisition and cost reduction. Second, HSBC sees ITUB as a prime beneficiary of this ongoing consolidation in the Brazilian banking sector. If those merger rumors that we've been hearing about come true, Itaú could emerge as a really dominant force.
Yeah, so it's not just about riding the wave. It's about actively shaping the future of the industry. And that's got to be a compelling narrative for investors. Speaking of shaping the future, Itaú Unibanco's annual general stockholders meeting is scheduled for later this year. Now, that's always a key event. But this year, it feels even more significant.
Oh, absolutely. This meeting isn't just a formality. It's a chance for stakeholders to really get a sense of the company's vision and strategy. And they'll be looking for reassurance that Itau is on the right track, especially given those economic headwinds we've been discussing. Transparency and clear communication from management is going to be crucial. If they can instill confidence, it could translate into positive momentum for ITUB.
So mark your calendars, folks. The outcomes of this meeting could really have a ripple effect on ITUB's stock performance. Of course, we can't talk about a stock without talking about earnings. February 6th is the big day for Itau's Q4 2024 results. Before we look too far ahead, let's just take a quick glance back at Q3. It was a little bit of a mixed bag, wasn't it?
Yeah, it was. Revenue dipped slightly. It was down 0.10% year over year. And that might cause some concern for some people. However, net income actually jumped significantly, almost 19% year over year. And that indicates that Itaú is managing costs efficiently, and they're finding ways to boost profitability even in this challenging environment. The question is, can they keep this up?
Yeah, it's what everyone's going to be watching for in the upcoming report. Will it be a sign of resilience, or are those economic headwinds starting to take their toll? And speaking of headwinds, let's zoom out for a minute and talk about the bigger picture in Brazil. The banking sector is undergoing some pretty major changes, including new regulatory measures that are aimed at kind of strengthening risk management. And then on top of that, we have those persistent rumors of mergers and acquisitions. So how should investors be interpreting these developments? Is it a case of batten down the hatches, or could there be a silver lining here for savvy investors?
Well, I think it's a little of both, to be honest.
Yeah.
The new regulations, while necessary, will probably create some short-term challenges for banks as they adapt. But, it could create opportunities for those who adjust quickly and embrace the new landscape. Itaú, with its proactive approach and its solid track record, could be really well positioned, not just to weather the storm, but to actually come out of it even stronger. As for the merger rumors, well, they definitely add a layer of intrigue and uncertainty. But, if Itaú plays its cards right, a strategic merger could significantly expand its market share and bolster its position in the long run.
Okay, so it's a dynamic landscape, full of potential pitfalls and opportunities. We've got all these internal factors. But, we can't ignore the external forces at play either. The global economic outlook remains uncertain, with rising interest rates and persistent inflation weighing on investor sentiment. So how does this global uncertainty, coupled with Brazil's own economic forecasts, they're predicting a weaker real and even higher interest rates.
Yeah.
How does all of that factor into the ITUB equation?
Well, that is the million-dollar question, isn't it? The global economic uncertainty definitely adds another layer of complexity to the analysis, and it could impact investor appetite for emerging market stocks like ITUB. Additionally, a weaker real and those higher interest rates in Brazil could put pressure on Itau's profit margins, squeezing them from both ends. So while there are positive signs in terms of the bank's internal performance and its strategic positioning, the macroeconomic context definitely warrants cautious consideration.
So we've got this interesting push and pull between ITUB's potential and this really challenging economic backdrop. It's kind of enough to make your head spin. To get a clearer picture, let's dive into the world of technical indicators. What are the charts telling us about ITUB's current trajectory?
Okay, well, right now, ITUB is trading below both its 50-day and 200-day simple moving averages, and that's generally considered a bearish signal, suggesting a potential downward trend, at least in the medium to long term.
Okay, so not exactly a green light for the bulls. Are there any counter signals that we should be aware of?
Interestingly, yes. The Relative Strength Index, or RSAI, is currently hovering around 37.58, and that puts ITUB pretty close to what's considered oversold territory.
So potential buying opportunity for those who are feeling brave?
It's certainly possible. A low RSI can often signal a potential reversal point, especially if the stock starts gaining traction. And speaking of traction, there's another interesting development. There's been a recent surge in trading volume for ITUB. It's significantly higher than the average. And that could indicate that there's accumulating interest among investors.
So even though the moving averages are kind of flashing these warning signs,
Mm-hmm.
the RSI and the increased trading volume suggests there might be some underlying bullish momentum brewing beneath the surface. That's quite a paradox.
Yeah, it is. It paints a picture of conflicting signals, and it makes ITUB a really intriguing case study for investors right now. You've got the potential for growth driven by these internal factors like the bank's digital transformation and those possible mergers. But then you also have these external pressures, mainly those economic headwinds. And then even the technical indicators are sending these mixed messages. It just adds another layer of complexity.
It seems like ITUB is at a crossroads, and the path it takes from here will be really fascinating to watch. So what does all this mean for our listeners? I mean, they're now completely captivated by this whole ITUB saga. Should they be hitting that buy button, holding tight, or maybe even considering selling? We're going to tackle those burning questions in the next part of the show, so stay tuned. Okay, so let's get back to our look at Itaú Unibanco holding SA ticker symbol ITUB. And try to answer the question that I know is on everyone's mind. Is this a stock to buy, hold, or sell?
Well, that's the million-dollar question, isn't it? And like always, there's no easy answer. Investing is a personal journey, and the right decision for you really depends on your own individual goals and risk tolerance and your overall investment strategy.
Absolutely. It's about finding that right fit for your portfolio,
Yeah.
not just chasing the latest hot stock tip. But let's try to break it down a bit. For investors who are a little more comfortable with risk and who really believe in Itau's long-term potential, what would you say to them?
Well, for those investors, the current price of ITUB, which is hovering around $5.36, might look pretty attractive as an entry point. Remember HSBC's projection? They see a potential upside of almost 28%. But of course, no investment is without risk. And with ITUB, those risks are tied to that uncertain economic climate, both globally and in Brazil. A weaker real and higher interest rates could have a real impact on the bank's profitability.
Yeah, so it's a calculated risk, one that investors really need to weigh carefully. What about investors who are maybe a little more risk averse? Should they just steer clear of ITUB?
And not necessarily. I mean, remember, ITUB is a well-established financial institution. It's got a long history of navigating these economic cycles. It's also paying a dividend, which can provide some downside protection. So for investors that are a bit more cautious, I think a wait-and-see approach might make sense.
Yeah, that makes sense. Keep an eye on things, gather more information, and just see how those economic headwinds play out. So what are some key things investors should be watching for in the coming months?
Well, that February 6th earnings report is definitely at the top of the list. That will give us all a much clearer picture of Itaú's current financial health and its ability to kind of deal with these challenging economic conditions. Beyond just the earnings, though, I think it's important to stay informed about Itau's strategic initiatives. Like, how are those digital transformation efforts going? How are they adapting to those new regulatory measures? And of course, any news on those merger and acquisition rumors would be big.
So it's not just about the numbers. It's about understanding that bigger picture, the story behind the stock. It seems like ITUB is a company in motion, constantly evolving and adapting, which can be both exciting and a little bit daunting for investors.
Oh, absolutely. It's a very dynamic situation, requires close attention and careful consideration. But, investing is a marathon, not a sprint. It's about making informed decisions based on solid research and a clear understanding of both the opportunities and the risks.
Well said. It's easy to get caught up in all the hype or the fear, but you're right. At the end of the day, it's all about making smart, strategic decisions that really align with your long-term goals. This has been a really insightful discussion. I think we've shed some light on the complexities of investing in a company like ITUB, especially operating in a market as dynamic as Brazil. Now, before we wrap up, I do want to remind our listeners that all the information we've talked about today is for educational purposes only and shouldn't be considered investment advice. It's always best to talk to a qualified financial advisor before making any investment decisions. So as we approach the finish line of our look at ITUB, what are some key takeaways for our listeners to think about as they continue their own investing journey? I think for starters, ITUB is really interesting because it presents kind of a blend of potential and risk. It's a company with a solid track record and a strategy that seems to be very forward-thinking, but it is operating in an environment that has a lot of uncertainty.
Yeah, definitely. Investors need to weigh those factors really carefully and decide if ITUB is the right fit for them. Does it align with their own investment philosophy and risk tolerance?
Right. And I think one thing that could really tip the scales is going to be that upcoming earnings report on February 6th.
I agree. That report will be a key piece of the puzzle. It'll give us a clearer picture of how Itau is actually performing in this current environment and whether they can keep up that impressive profitability.
So mark your calendars, everybody. February 6th is the day to watch ITUB. But beyond just the numbers, I think it's important to remember that investing isn't only about crunching the data. It's about understanding the company's story, the forces that are shaping its future.
Yeah, I couldn't agree more. In Itau's case, their story is about digital transformation, strategic mergers and navigating this really complex economic landscape. And it's a story that's not finished yet. It's one that investors need to keep following.
That's a great point. It reminds us that investing is a dynamic process. It requires us to continuously learn and adapt. Well, we've covered a lot of ground today, exploring ITUB inside and out, Itaú Unibanco Holding SA. As we wrap up, I want to emphasize again that this was just for educational purposes and shouldn't be taken as investment advice. Remember, everybody's financial situation is different, and the best investment decisions are the ones that you make for your own goals and risk tolerance. If you're looking for more personalized guidance, definitely talk to a qualified financial advisor. But whether you're already a seasoned investor or just starting out, we hope that this episode has given you some good insights and maybe even sparked your curiosity about investing in general. And if you enjoyed the show, please don't forget to subscribe to Investing Talk Podcast. That way you'll never miss an episode.
And if you found it helpful, please share it with your friends, colleagues, anybody who might be interested in learning more about investing.
We believe that knowledge is power, and we want to empower everyone to make informed financial decisions. And one last thing, if you have any thoughts or questions about ITUB or anything at all related to investing, feel free to leave us a comment below. We really appreciate hearing from all of you. We're always looking for new ideas and perspectives.
Thanks for listening, everybody.
Happy investing, and we'll see you next time.